Hello, fellow traders. 'Tis I, the Rumpled One. Happy February. It's February 1st, the year 2018 starting over. When you're trading, each trade gives you a chance to start over. What do I mean by starting over? Well, the trades that preceded that trade have nothing to do with your current trade, whether you won, whether you lost, whether you were on a hot streak or a cold streak or just a normal streak. Doesn't matter. Each trade you start over. You get a chance to do everything the way you said you were supposed to. Execute your trading plan, your money management and risk plan, your psychological plan, go through your pre-trading checklist, put your exit playbook into practice. Everything's new each trade. So if you messed up last trade, it's over. This trade, forget about what happened last trade. Focus on this trade. Be in the now, be in the moment, because that's all that there is anyway. So let's get to the charts. But before we get to the charts, we always look at money and risk management. Like I said, we get to start over. We get to choose how much money or what percent of our account we're willing to lose. Now, we probably really don't want to change that each time. We want to have some consistency. But it's a new month. Maybe you've had a really good January. So you might want to up the dollars that you're willing to lose, or up the percent, which of course would up the dollars you're willing to lose. So maybe you keep the percent the same, but because you may have increased your account significantly, you're going to be risking a little more dollar-wise each trade. Okay, here's the charts. I asked a fellow trader, which pair should I focus on this month, or at least for this week? He said, do the pound. Okay, the British pound, US dollar. And as we can see for the week, the pound is up. And, of course, the gap's filled. And you can see it's in the upper wick zone on the daily and the weekly. And starting over, let's see if I can remember to do this, show which indicators I am using. So we drop over to the daily, and we can see that the pound is 27 pips above, now 28 pips above the open, 60 pips below the high, 55 pips above the low. And if you don't have the dashboard, you can use the magnified market price indicator that I modified, where it displays this information. And this is just one of the modifications I made. You can show the discount, the fib retrace. This is the GPS, so you know where price is on the chart. And you can see we've been up 3 days in a row. Buzzard reversal time. For those of you who don't know what a buzzard reversal is, based on statistics, after 3 bars of the same color in a row, the probability that price is going to switch direction increases. And looking at the buy zone, the simple buy zone here. You can see price went up, hit the buy zone, gave you an opportunity to take profit. Hit the sell zone, gave you another opportunity to take profit. Hit the buy zone, another opportunity to take profit. Simple trade. Somebody sent an email and they asked me, they only get about 2 hours to trade each night, and what should they trade? And I think they were in the London session. So I told them, chances are you might want to look at the breakouts for the day, week, and month. In other words, if price is breaking out of yesterday's high or low, if it's breaking out of the previous week's high or low, or the previous month's high or low. I said you could just put pending orders at those levels with a TP, take profit, and SL stop loss, and then you can pretty much just walk away. You can sit there and monitor it, but you've got your trades on, and they'll either trigger or they don't. And you've already set the parameters. So what could be simpler, right? Or the same thing would hold true for the buy zone. If you can look at the chart and go, hey, if price is up here and it hits here, maybe I want to take that sell. Or if price is down here and it hits here, maybe I want to take that buy. Maybe what you could do is you could do a combination. You could put your pending orders at the previous day high and low, and while you're watching, if anything's near the open price, you can actively trade the buy zones, or ditto for the rat zones. Once again, if you look at the chart, and I believe if you were in the London session, you see here it put in a high, then it came out. So those are my suggestions to that trader, or to any trader that might be in a situation where they don't have 8 hours or even 4 hours to sit there. They might only have a couple hours to look at the charts. They have, trading isn't everything. It's only some things. In fact, today, I've got to get out of here. I do some volunteer work, once or twice a month, so I've got to go do that. Fortunately, I'm in a position in life where I don't have to depend on any one thing, and I can, give back to the community. So, but not everybody's in that position. Okay, pivot fade. Here we go. We had the open, we had the pivot. Obviously, it crossed through the pivot, crossed back up and out of that pivot zone area here. You can see it hit R1, went through yesterday's high. So once again, had that trader maybe from the previous day, or when he woke up in the morning or something, goes, hey, I can put this trade on right there, set that pending trade, would have been able to take a few pips profit off the table. And when you do those type of pending trades, don't be greedy. I mean, maybe you go for 5 or 10 pips, or maybe you go for 15 or 20. You just have to look at the chart, see what you believe you can get out of that trade, and set your TP and stop loss accordingly. It's not that difficult. You just have to do it simple. Like I say, you get to start over every trade. Price action. I mean, once again, we've got the here's a perfect example of a rat reversal. 1, 2, 3 H1s in a row. It put in a lower low, turned around at the line here. If you didn't get that one, because it would be red at the line, it's green at the line here, right at the open. You go long, you got 10, 20, 30, 40, 50, 60, 70, 80, 90. If you stuck in there on that pullback, 100 pips. But you should probably been out around 80 based on price action. So this stuff is just simple. And once again, here's another rat reversal. 1, 2, 3 reds in a row, put in a new low, turned around, green at the line, boom, there's another 10 pips in your pocket. Here we have a breakout on going for a turn trade. We've got a green candle followed by a red candle. Right here, red candle's breaking the low of the green candle, turning. Same here. We've got a turn trade possibility. Also, red candle followed by green, breaks the high, you jump in there. Either way, there'd be pips on the table. Right here, you see red at the line, you just take that trade, boom, you've got 10 pips in your pocket. I mean, oh, I think I might have forgotten. See, I get a chance to start over and do it right. There's the indicators for that chart. I think I forgot here too. The indicators for that chart. And the indicators for this chart. You can hit pause when you're watching this if you want to see what indicators. Okay, what are we looking at here? I modified TRO-HL5 and I put the new code out on my Facebook group, TheRumpledOne, Never Lose Again. The TRO-HL5 indicators, the one I modified. And what I did to it was I gave it the ability to shade the current day and also shade the previous day. And if I can, I know at the bottom you can also shade to the right of the chart. I can show you that in just a second here. So you've got the color shade, color previous day, and up here in the true false area, it says show the side markers, which are these colors to match these colors. You can also shade to the right, shade the day, shade the previous day, and shading to the right will do that, in case you're interested. And so let's see here. Let me turn that shade off. Shade right false. It just depends on how you liked your chart, and I thought that was a good idea. And once again, we're just looking at the 5 lines from the previous day here: the high, the low, the open, the close, and the midpoint. So it just shows, so you can see here when that high was put in and how today has reacted to that high. Simple stuff, simple stuff. And once again, we're just trading price. So today we'd be trading price at the line right here, red at the line, we go short, green at the line, we go long, red at the line, we go short. Right here, this is one of those tricky ones. It was green at the line and it was red at the line. Green at the line. So once again, you can, if you don't like using H1, you could use M5 if you want, if you really want to get in there and scalp. But price is the same on all time frames. It's just how much price, how you look at it, how compressed it is. And once again, the wick zone. Price doesn't like staying in the wick zone. I say it every day, but that's something you want to think about. Some things happen every day, just like, you know, price makes the lowest open, price makes the highest open, and it leaves that area every day. It's simple. There's really nothing to think about, which is cool. So starting over, you go, you know what? I'm going to keep it simple. I'm going to do it right. And the squigglies, I know, just people say just skip by that. And here we go. When I started the session, this is where price was, and as you can see, it broke out. And from 09 to 05, there's 4 pips. Probably could have had 5 here when it or 4 here when it reversed. You're just out of the trade. Chance to get back in, and then you get to do it all over again. And once again, looking for reasons not to trade. And we're just looking at the tick chart. As you can see, it is just in a tight range, not doing much, only a 4 pip range. So, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off.